Welcome back to the Heinz and Clark YouTube channel, or as Steve so stupidly called it, the Tube. We're going to continue on with a topic we talked about last time, S Corp, and move into, hey, we've made the decision, we're going to become an S Corp. What do I do next? What are my immediate next steps? What's different from an operation and filing standpoint? And if we have time and don't bore you to death, we'll probably try and hit on some what's the same for you. So yeah, that's kind of our agenda. Usually that's Steve's job, but
well, I'll add a little bit to it.
Beautiful.
And I was told that Aaron's louder than me because he talks closer. I think it's because he's louder, but I'll try to talk a little closer.
We're gonna vote on it later.
And ironically, maybe not ironically, but today is March 16th.
That is ironic.
Which is the day after the S Corp deadline. So one thing that's different is instead of filing the taxes for your business on April 15th being the deadline, March 15th becomes the deadline. Now you can file for an extension, so it's not a hard deadline, if you will, although we strongly encourage you to send us your tax information to meet the March 15th deadline.
That way we have to work less in the summer.
Right.
Yeah.
Yes. Yeah. Golfing. All right. You want to jump in on some of the bullet points that we have on here?
I'll just jump in. That was me jumping in. So you've made the decision to become an S Corp. First things first, if you don't have an LLC set up, which would be the legal entity, you need to set up an LLC. You can set up an Inc. as well. But you do need to set up an actual legal entity for the business. After that, you need to make...
That's done on the Minnesota Secretary of State website, assuming you're in Minnesota. You can do it online for $155. Just a one-time fee. It's a free renewal every year.
It's a pretty quick process.
Basically
selecting your name and then the name you want for the business. And then... for that search, you want to use the business entity search. Make sure that name's not used. But then you basically tell them who you are. And
if you need help, we do quite a few of these for people. A little bit of an upcharge, but not much. So
after that, you need to make the S Corp Election, which is done on Form 2553. Again, a pretty easy form. We do that for clients all the time. So you got to sign 2 spots on it. I think Steve was saying he tries to make it as easy as possible. I got a form, sign it, and then you're done. So pretty easy process to actually become the S Corp. From there, a few differences, and do you want to jump in on that one?
Sure. The biggest one I think for people is you have to reasonable comp. You have to essentially pay yourself as an employee, pay yourself a salary. Which requires you paying yourself through payroll. And we could do a whole another, probably a few of these on payroll, but payroll is actually quite complex. I think a lot of times clients think, well, you're just running a payroll just for myself. It's got to be pretty easy. Well, payroll has federal filings. You have several different taxes just on the federal side. You have federal income tax, Social Security, Medicare, federal unemployment. Then you have your Minnesota tax return that you need to file for it. Both to the Minnesota Department of Revenue and unemployment as well too. They all have different filing deadlines, different deadlines for the deposits. So it actually can be quite complex, even though it's not, like an overly, valuable thing, if you will, right? But it's something that it's one of those things where you need to make sure that you're meeting deadlines and doing things accurately.
It's one of those things where if you do it right, can be a relatively easy system. If you try and do it all yourself, it's complex. And if you miss something, it just becomes kind of a nightmare. It's one of those things that goofing it up is where you start to find value. So if you never goof it up, it's not as always easy for people to see the value.
And the IRS is very unforgiving when it comes to payroll taxes. Much more so than with your income tax. So the other piece of this, and this is different but maybe similar, is estimated payments. So if you were just filing your business as a sole proprietor on a Schedule C, you probably should have been making estimated payments anyways. So that would be done quarterly. Same thing with an S Corp. So The S Corp is a pass-through entity, so the income still flows through to your personal returns. You still need to make personal estimated taxes with that as well too. And what we do for the vast majority of our clients who are in this situation is we essentially roll those into the payroll. And so we'll run usually a quarterly payroll for these clients, quarterly because that's how frequently you need to file the quarterly payroll.
Estimated payment.
Yeah, and the tax forms as well too for payroll. So we'll do a tax plan for our clients, and essentially through that payroll, we'll also make their estimated payments. So, they'll essentially take a salary on there. We'll pay federal income tax, state income tax, Social Security, Medicare, and a lot of times we won't even send the client a net check, if you will. So no money will go out of their business bank account into their personal bank account. It'll only go out of the business account to pay the various taxes to Minnesota and the IRS.
Yeah, the advantage to that is estimated payments are you have to make them quarterly. Through a payroll, we have an option of and kind of we may do things slightly different or not. We can set up a flat rate type of payroll for you to run throughout the whole year, get a little bit paid in throughout the year, and then a lot of times we do our tax planning around that October, November timeframe when people really know what the year looked like and do a bonus check if you want. I want to call it that, and pay in the remaining chunk of tax that we anticipate that they'll owe. The advantage to payroll is the IRS and state of Minnesota see it as that's been evenly paid since the beginning of the year. No matter when you pay it, you could pay it on the last day. It's like you've paid evenly throughout the year. Estimated payments don't work that way. So it provides this advantage that we don't need to do tax planning every quarter. We don't have to. If you want to, we're more than happy. But you can do kind of a flat throughout the year and then do a bonus at the end of the year and not incur any penalties for your underpayment throughout the year.
Yeah, the way I kind of describe it to clients is, especially if it's not their first year, but we'll essentially maybe start the year based on the plan we had in place the year before. And then as we get further along the year, we'll know how much they're going to have in income, and maybe they're going to be it's going to be a lot easier to project out. And so then we'll just adjust the payroll. We'll actually update the tax plan at that point and then adjust the payroll for the rest of the year. We have a lot of realtors who are on this, and so they might just skip the payroll altogether. We'll just file zeros for them the first quarter just because they're not maybe having as much revenue coming in. But then by that third quarter, they have a much better idea on what their revenue has been for the year, and then also what homes they have that are projected to sell. So this kind of provides several benefits I see to clients. It's one, getting that salary on there, two, making your estimated payments, and three, the tax planning, so that at the come April 15th, or hopefully before that, when we finish your tax return, you're essentially a break even. Maybe you owe a couple $100 or receiving a couple $100, but there's no surprise of, oh my God, I owe $10,000 or whatever the amount is. So one other thing I wanted to just add about the payroll too is, as far as kind of tax planning, another kind of the next step I often talk with people about is retirement. The plan type of retirement I typically recommend for most situations is a 401k. And if you're the owner and you don't have other full-time employees other than the owners or spouses, you can actually set up a solo 401k, which is much cheaper than a full-blown 401k, but provides the same limits. And is it $59,000 for 2022?
Yeah, it's 59, or it's jumping to like 60, 61.
Yeah. Around 60,000 is the max you can contribute. So you can contribute anywhere from 0 to 60,000, and you can adjust that every year. And it also helps us keep the salary lower, which helps pay less in Social Security and Medicare by doing that. So people often ask us if we do the 401ks. We don't, but we certainly know several financial advisors that do that we can refer you to as well too. So.
Yeah, and in order to do those, you do need payroll set up,
Right.
Because it's based on that. So it's just another reason where payroll becomes a very beneficial thing. Another plan that a lot of people use is a SEP. They're really quick and easy to set up compared to solos are relatively easy. 401k is a little more difficult, but a SEP option is another good one, and that's based on what you've run in payroll in your max contribution.
But what I don't like about the SEP is it requires a higher salary amount.
It does. It runs
typically,
it runs you into some additional.
I think that what's interesting
is
is
a disadvantage.
We weren't planning on talking about this, but
yeah.
I actually see financial advisors recommend a SEP all of the time. I shouldn't say all the time, but a vast majority of the time. I think because to them it's easy. Mm-hmm. But there's a huge component I think that's missing on that, because with a 401k you can make an employee deduction up to $19,500, I believe it is, or $20,500 now.
Yeah, and the only requirement is that you have at least that much in
salary,
wages.
Right. So if you take a $20,000 salary, this isn't exact numbers, but I'm just going to use it. You can take a $20,000 salary, put $20,000 into your 401k, versus a SEP. If you take a $20,000 salary, you can only put $5,000 into the SEP. So that's, I think, a component that a lot of financial advisors are missing when they're making that recommendation, and kind of why I don't know why you would choose a SEP over a 401k.
The only real reason would be when you decided to do it. The SEP you don't have to, like the 401k, and there's somebody out here that's going to correct me on this one, but 401k I think needs to be set up by like an October 31st. In order to be able to contribute to it during the year. It needs to be
set up in the current year.
The same
SEP
calendar
can actually
year.
be set up by the time you file your tax return for that year. So is like the only benefit, in my opinion, of a SEP over a 401k. So
yeah, I mean costs are probably a little cheaper, but
yeah, maybe, but
I don't know.
I don't.
If you're trying to contribute $60,000 to a retirement plan, the cost savings on on or the even plan document isn't going to be the same you're going to save in the SEP contribution. Anyway. That's probably a whole nother topic too. I think, really the only other difference to talk about is a filing difference. Doing the S Corp election, you do have to file an 1120S, which is a separate return from your personal. I try and explain it as somewhat an informational return because no tax is really paid there. There's a potential for a Minnesota filing fee, essentially based on three factors: payroll, income, and assets. Yeah, but it's very minimal. There is a new pass-through entity tax that Minnesota put into place for 2021. We will probably discuss that in a follow-up video. There's a lot to that.
But maybe just on that real quick, and it's only a benefit to you because it's an election you can make. It's not a requirement that you do it. It's not an additional tax. It's essentially if you have an S Corp or a partnership, essentially you can pay the tax on your Minnesota income of that business through the business, which makes it deductible. Typically, your Minnesota taxes that you pay aren't going to be deductible, or they're limited.
On your personal return.
Yeah, this makes it fully deductible. Still flows through to your personal return, so it's not like you're paying an additional tax. So again, it's only another benefit of filing as an S Corp versus as a sole proprietor on a Schedule C. So.
Mm-hmm. And so to that, but not a whole lot of tax on the S Corp unless you do make that election. We have done that with a number of our clients that have wanted to do it. But outside of having to file that separate return, the tax is treated very similarly, almost the same as if you were filing as a sole proprietor. The income from your S Corp flows onto your personal return where the actual tax is calculated, and then you pay it personally. So really the difference is that you see here is having to switch and add payroll. The way we do things is you kind of get rid of estimated payments because we move it into your payroll for ease and for the benefits that we talked. And then filing, we have to file a separate tax return that has a different deadline of March 15th. But really at the end of the day, when you go to pay your personal tax bill, it's almost identical to the way you've done it in the past.
Just less because of the self-employment tax.
Yes.
Significantly less.
Significantly less.
Yeah.
And that's where you're really seeing the benefit. Just to quickly run through some of the things that are the same outside of that. Tax still on personal, just went through that. Exception, that PTE piece, and we'll do a follow-up video on that to provide.
I think it's good to say, too, that your deductions are essentially the same. Right?
Yep.
It doesn't change how you report your income or your expenses. I mean, the forms look a little bit different, but if something was deductible before, it's still deductible now.
Yeah, that was kind of my last point of tracking, reporting from your end on however you do your profit and loss and balance sheet. If you do it on a spreadsheet, if you write it down on a sheet of paper before you bring it in, if you do QuickBooks or some other type of accounting software, really that piece doesn't need to change. And so kind of making the switch to an S Corp has some necessary pieces, but when it's all said and done, the benefits vastly outweigh any kind of cost and really any difference that you're going to see or feel on this.
And I think that's why this is actually Adam Wood, who I think most of our clients probably know.
Yeah.
This was his idea because, we'll get, at this time of the year, we set a bunch of people, a lot of clients up this way for the first time. And then we go to run their first quarter payroll, and there's kind of a lot of confusion about, like, why are we doing this? Wait, I'm paying myself as an employee, and they're just, they're not expecting this additional payroll, this additional, maybe fee that we're charging them, and they don't understand kind of the benefit that they're getting through all of this. And so hopefully this will provide some clarity on that for people who watch it, and, something we can use in the future to help educate people as well, too. So,
yeah. Cool.
I
think that's everything.
Check out our socials.
That's everything that we're going to go over today. Yeah, check our socials. and continue to watch us on Steve's Tube.
All right.
All right.
Well, cool.
Cool. See you later.